Three, two, one. All right. Hello, everyone. Thank you for joining us this morning on this special webinar on credit and credit repair. My name is Andrew Seeker. I'm hosting this webinar, and I'm the owner and CEO of Anchor Business Capital. And I know I have another website as well, Anchor CREI, which stands for Commercial Real Estate and Investment Capital. And that's for commercial real estate deals if you want to buy, apartments or even investment properties, single family. But they're two different websites. This credit and credit repair webinar is geared for both business owners and for real estate investors, even though I'm going with the Anchor Business Capital business this morning. I am very honored and thrilled and blessed to have Miss Ivory Becker with me this morning. She is the CEO and founder of Incite Strategies, and she's been in this business since 2008 and has corrected over 12,000 credit issues. I was doing credit repair myself about 2 years ago. I've been out of the business for 2 years now. And so during this time, I focused on the lending business. So I've kind of gotten rusty on this. So this is why Ivory is here. She's the pro. She's going to correct me and set me straight. Well, set all of us straight, right? Okay, so Ivory, I'll let you go ahead and introduce yourself, please.
Sure. So my name is Ivory Becker. My background is in regulatory compliance. When it comes to the default side, I've dealt in every piece of the business, if you will, when it comes to the credit side of things. My company is based in Vancouver, Washington. Currently, we're working with clients in about 29 states, and work with about 800 different loan officers across the country, along with some business bankers and others in the field, like Andrew. We help people with removing negative information from the credit reports, but we also have a heavy focus on credit reestablishment planning, which essentially involves the prioritization of knowing what to pay as far as debt goes, what should not be paid, and then just the best order of operations for seeing the highest increase in scores. Along with that, looking at what is working well on the credit report and optimizing it, and then looking at what might be missing from the report that can be added to improve scores. And then lastly, our other focus is on credit education. There's just not enough of an education out there that people can rely on. We're not taught in school. We're not taught once we enter the business world how credit works. So in working with Andrew, we're able to help guide people and give them proper information when it comes to credit.
Mm-hmm. Yes, absolutely. Thank you, Ivory. Great introduction. And yes, credit and credit repair, everything is super important, which is obviously what we're going to be talking about here over the next few minutes. So one of the questions I always ask borrowers, forgive me, Ivory, I'm going to take over here for just a minute.
Oh, of course.
But one of the questions I ask my borrowers and potential investors and things like that, one of the first questions I ask them is, do you know what your credit is? And the answers I usually get are like, well, I think it's around in the low 700s, right? And the thing is, when I pull up their credit report, even if I go on some website, I don't know, Credit Karma, I know is a really popular one, and I know Ivory and I don't like this site at all. I don't think much of it, but just I often tell clients, just pull it, get it off of Credit Karma, at least get an idea. At least you can get your report and see if there's any derogatory credit on it. And then, as far as the scores are concerned, we can do that as we progress. But if you have like, for example, an IRS lien, or I had a client that was behind on his child support payments, and so it really shot his credit down, and so I couldn't get him financing. But anyway, I always ask this question, do you know what your credit scores are? You should know this because as Ivory and I are gonna explain to you, this is so important, especially if you're looking to obtain a loan for anything, be it a car, be it an apartment, if you're doing any kind of investing, even if you're buying your own personal residence. All of this stuff is so important. Credit is probably the number one factor in any type of financing transaction that takes place. And if you don't have good scores, you could, even with some less than stellar credit, you can still get financing, but it's just going to be more difficult and it's going to cost you more. And again, I'm probably getting a little bit ahead of myself here. So I'm going to cool down here and let Ivory step in. We'll go on to the next slide.
One thing I'll bring up real quick before we move
Okay,
on when it comes to the
sure.
scores is something that many people aren't aware of is there are multiple credit score algorithms. So this
Mhm.
can cause some confusion when you are going to apply for different types of products. So it, it can be best when you're pulling your score to look at what version of your score you're pulling. Often if you're on any sort of a monitoring site, you're using your bank's app, if you scroll to the very bottom in the disclosures section, that will tell you the algorithm being used, whether it's FICO or Vantage, and then what
Mm,
version that is. And then the lender you're working with can share with you what type of score that they're utilizing so you can match the two together.
mhm. Yeah, thanks for pointing that out, Ivory. Yes. So can you explain a little bit more between the difference between FICO and Vantage scores? Because just as I was getting out of the credit repair industry myself, I kind of noticed that the algorithms and they
Mhm.
have this and that, and then there's even a fourth credit bureau. Oh, for the life of me, I'm drawing a blank. Um, Ivory, you probably know, but I think there was a fourth one, and they even had a little bit of a slightly different algorithm in how they calculated their FICO or their scores, credit scores. Um, so I'm sorry, Ivory, go ahead.
Sure. So when it comes to the main two versions used are the FICO credit score and then the Vantage credit score.
Hmm.
So with each of these versions, you have an Equifax, Experian, and TransUnion score, the big three bureaus that are the standard.
Hmm.
Um, the FICO credit score is the oldest credit score that's been standardized that is used today. And that's what is primarily used in over 90% of lending transactions that take place across the United States. The FICO score itself, the main algorithm that's used today is called, the oldest algorithm used today is called FICO Classic. That is what's used in the mortgage industry primarily. And that FICO Classic model was introduced, I believe, in 1989. Since 1989, we have seen new iterations of the model. Essentially, you go from that FICO Classic model all the way now to FICO 10 and FICO 10T that exist. Most commonly, you'll see FICO 8Us. So there are various models that can be utilized for any sort of a lending opportunity, and that bank gets to choose what FICO model that they would like to use. The new algorithms that take place with FICO are just based on changes in consumer behavior. You can think of a credit score as a risk mitigation tool. It's meant to predict the likelihood that you can satisfy the obligation that you're applying for, right? Will you default on that loan product or that credit product or not? So the
Excellent.
Vantage credit score was introduced in 2006. So that is the newer credit score model that exists, or algorithm, if you will, that exists, because it does have its own model. So the newest algorithm. And that was generated by the credit bureaus. So they created that score because they don't own the FICO score. Fair Isaac Corporation is the owner of the actual FICO score. So the bureaus assumptively likely wanted to own some sort of an algorithm, because who doesn't want more control in the business that you're in?
Right.
So at this point, the Vantage algorithm is not widely used for any lending opportunities, or conventional lending opportunities, I should say.
Mhm.
The algorithm also has several models that have come out. you're going to see the Vantage algorithm for most of your free credit pulls. So if you're free credit sites, so Credit Sesame, Credit Karma, the Chase My Credit Journey is another common one. But a lot of the places where you're getting a free credit score are most commonly going to be that Vantage score versus the FICO score. And it's not a one-to-one comparison. The algorithms are different. The weightings of the information are different. So those scores are not going to be the same.
Mm-hmm. Wow, that was absolutely professional and to the right, just spot on, Ivory. Thank you so much for that explanation.
Sure.
That's a good thing to know, folks, about the FICO and how and the different ways that they score, come up with the scores and everything. But it makes total sense that these credit bureaus, they want to have some kind of control in the algorithms and how they calculate these scores, which makes it kind of challenging for all of us outsiders to try to figure out what they want to see and what numbers are look good to them. But moving on here, just this is just from my experience, present experience, and this applies mainly to real estate. If you're investing in real estate, and I'll comment a little bit more on this in just a minute. But when you're buying it, if you're an investor and you're looking to purchase, let's say a fourplex, and I take you to one of my, multifamily lenders, they basically break up their rates and terms based on FICO scores. Uh, and 620 to 680 is the low end. There are lenders that will do, below 600, but they're very expensive, just to let you know. And if you have any kind of FICO score below 620, or, I would recommend that you work with Ivory and, raise your score and then come back so you can get the better rates and terms and everything. But a lot of these lenders, I kind of broke it down here as you can see on the screen. A 680 to 720 FICO is you're considered a good borrower, but not somebody, you're just not their ideal borrower. So they might charge you, they may tack on an extra 1% onto your loan, the APR. 720 to 780 is considered really good. Usually your pricing for your loan is a lot better. And then of course, 780 to 800, you're basically stellar, considered very stellar or above, I should say 800 plus. And once again, this is just a general rule of thumb. Each lender is a little bit different. For some people, they're sticklers on credit scores, but a majority of the lenders, I should say, are not really score driven. They just want to make sure that you don't have any bankruptcies or any outstanding liens or anything derogatory on your credit reports. But they still kind of sort of look at the scores, but the scores are not so important to a commercial or investment lender as it would be for, say, a bank or a lender, that's lending on your personal residence. Then they get a little bit more tighter on those things. So moving on here, I put up a little example here on the screen. So if you let's say I actually had a client that she claimed to have a 780 FICO score. When I pulled up her score, this happened a few years ago, I think about 5, 6 years ago. I pulled up her report and she came out with a 720. And so the lender actually did this. It was maybe a 719 or something like that. But the lender actually gave her, a 1% higher loan because of the score. And all it was is that there was a late payment to Bank of America that was dated just a shade over 2 years. But she said, "Oh no, I paid Bank of America. I made that payment, and it was only for like $120 or something really silly like that." So I told her, I said, "Well, contact Bank of America and get a statement from them saying that you paid it." get a receipt or whatever, some kind of acknowledgement. So she did, and we submitted it to the credit bureaus, and of course they took care of it, and her score went back up. But that's another thing that I always tell. This is another reason why you want to keep track of your credit and where you're at, especially if you're getting ready to, do some kind of financial transaction. You want to maybe, and I'll let Ivory kind of point you in this direction, but you want to go to a source where you can pull a credit report, and you want to review it and look over it very carefully before you move into the transaction. But anyway, I'm getting a little bit off track here. So back to our example here. So I have let's say I have a $400,000 mortgage. Even 1% difference can cost an additional, and you'll be surprised here. So I calculated this. I used 6.5% on a $400,000 loan. You can see your payments would be about 25, 28, and 27 cents. If my credit score is like 680, I might get this set. I'm sorry, I'm doing this a little bit backwards. If my credit score is 720 or above, I'll probably get the 6.5% interest rate. But if I'm below, say 720, and again, I'm just generalizing, this is not gospel truth. Every lender is a little different, but even a 1 to 5 point difference in that range can be the difference between that 1% loan difference there. So let's say, for the sake of argument, that I had a 712 FICO score, right? The lender would say, well, because you're under 720, you're going to get the 7.5% interest rate. So, I want to buy a house or whatever, or invest in this property. So I got to think about this. My loan is going to be, my mortgage payment, principal interest is going to be $2796.86 per month. That's a $268.59 difference, just because I have something showing up on my credit report that, maybe I was like this lady, this one investor, and, just forgot or didn't get confirmation for that payment that late payment, or and it's still showing on my record, on my credit reports. Sorry. So that's huge. So here's the mind-blowing thing here. So I did this here recently. I calculated all of this over a 30-year period here, at 6.5% interest. Your interest payments are going to be, close to $500,000. That's if you made all your payments faithfully and all that, at 6.5% interest. And then at 7.5%, you're at $630,670.82. And the difference here, we're looking at $135,478.78, just in the difference of 1% in the interest rate. So this is why I tell investors, and well, even homeowners, I mean, even if you're not interested in real estate investing or getting a business loan or anything like that, even if you're buying your own personal residence, I think it's really, really critical that you make sure that your credit is good. And this is where Ivory comes in, because she can help you with that. I'm always encouraging people to raise their score, even if you're at 680. Contact Ivory and see if you can get that to 720 or higher. 730 would be awesome. And obviously the higher the better, right? So yeah, so that's all I've got to say on that. Take a look at your credit report. If you're below 720, consider getting some help. Consider contacting Ivory. She's the pro. She can help you out with that. Okay, so before I move on, I just wanted to ask Ivory if you have any comments, or if you want to add something. I need to kind of take a coffee break here.
Oh, you're fine. I think can you see me on the video? I think I'm frozen.
Yeah, I think you are frozen too. That's okay.
Try to come back, but oh, there we go. Okay.
Yeah, now you're back.
Can you ask me your question again now? I was trying to fix the video.
Oh, okay. Yeah, no, I just wanted to know if you had anything to add to what I just said.
Not necessarily anything specific to add. I would just say that when it comes to looking at the credit report, there's so many errors on credit reports, and people
Mhm.
often aren't aware that the errors exist. So about
Right.
70% of credit reports have an error. Those
Mhm.
errors can be utilized to get negative information off of the credit report. So, I mean, really to piggyback on what you're saying is if you do have anything on your report that is negative, it is worth at least a review of the credit report with a professional. That can let you know if there is a possibility to see things removed from the report to help boost the score. And then, of course, outside of removals, there's still always things you can do that impact the 5 credit score factors to help the credit score. But essentially, with the Fair Credit Reporting Act, when it comes to credit repair, primarily what you're looking for is anything that's inaccurate, incomplete, or cannot be proven. Um, and that's the main area of focus for removals. Now, there are, of course, other things like with the pandemic, we can look at the CARES Act. If you've been in within 600 miles of natural disaster, there's FEMA. I mean, there's all sorts of things that can be utilized to work on negative information. So,
Mhm. Mhm. Okay, good, good. Awesome. Thank you so much for that.
absolutely.
Okay, so yeah, let's I know I kind of jumped the gun here on this slide, but here's some a couple tips I would like to share with you, and please understand this was 2 years ago, 2.5 years ago, so I may need Ivory to step in and interrupt me and set me straight on this. But here are a couple tips that I learned uh several years ago now. But the credit bureaus, when it comes to short sales, they don't use the word short sale. They use account status codes, which is usually a 2-digit number. There's no code for short sale. They report it as a foreclosure. And this, according to, you know, uh, what is that organization? The Consumer Protection Credit Bureau, I
Consumer
think, or something.
Financial Protection Bureau.
There you go. Yeah.
CFPB
Um,
for
they,
short.
they can, yeah, sorry. I know there's such an alphabet soup, so many organizations out there. But anyway, yeah, this is considered an error. And so you can dispute this with the bureaus and, report it as saying, hey, look, this is not a short sale. This is inaccurate. Or, I mean, a foreclosure. This is inaccurate. And, please remove it. And so the credit bureaus, they usually respond with, verified, they're trying to maybe in a hurry to get you off their back. And so they'll send you a letter saying that's verified, and then you can send that letter to the lender and, give them some time to respond. And they also verify it. And then you can go back to the credit bureau and say, hey, look, this was an error. Here's the proof. The lender just admitted it. So please remove it. Is that Does that have any weight these days, Ivory? Is that still something that's creditable, or is this something that I shouldn't be talking about? Oh, you're muted.
Sorry. Oftentimes when you reach out to the credit bureaus um, to dispute any sort of an error, it's not, I should say, it's not uncommon for them to come back and say that it is verified. Uh, the credit bureaus, even more so nowadays, are using stall tactics as credit repair has been more publicized. We're seeing a higher amount of disputes going to the credit bureaus, and they certainly just don't have the manpower to deal with all of the disputes that are coming their way. And they are obligated to notify you of investigation results in writing. They're obligated to investigate as well, and they're obligated to do so within a set time frame. So if they fail to do so, then you have a case on your hands where you can file a complaint with the CFPB, for example.
Mhm.
But a way out of it for them is just to come back and say verified, right? So getting a responsive verified really should just be the beginning of the process, and really should just kickstart what happens next. The trouble is most people feel stuck at that point, and that's typically going to be when you involve a professional who can pick things up where you left off and really hit the ground running, to make a case for you to get these things off of your credit report. But
Mhm.
the Fair Credit Reporting Act is there for you. It is there to protect you as a consumer, and you can utilize that when it comes to your credit report. It's your right. So
Mhm. All right, very good. Thank you for pointing that out. Yes, I mean, this is surface. Again, this is kind of surface stuff. I know there's a lot more to it. We often have to dig a little bit deeper and work a little bit harder to get this removed and get this all taken care of. So thanks for pointing that out, Ivory. Appreciate that. Okay, let's move on. Debt collectors. Okay, so I know this is important. I know a few years ago I had run up my credit cards pretty high, and I had a couple of debt collectors calling me, and so I kind of learned this as I went along to deal with these people. But uh, one of the things, if they say, "Hey, you owe this money," ask them to provide you with the original loan documents, and it should be pretty easy because debt collectors, they don't get the original loan documents. They get maybe a copy of it, and they're just simply buying debt from the bank, and then trying to collect the difference that they get from that they pay the bank from the original loan, and that's how they make their money. But nearly 100% of the time, they don't have these docs, so they can't comply, and that's where your superpower comes in. That's where you can score big. I also understand that you don't have to answer the phone. You can tell them to stop. And if I remember correctly, even if they're calling from a different state, they're not allowed to uh, harass you and call you uh, if they're located in a different state. And so I don't know, Ivory. I'm gonna have to defer that over to you because it's been a while and I don't remember exactly the details on that. Okay, you're muted. You're muted again.
gotta stop doing that. So when
That's
it
okay.
comes to debt collection practices, that's certainly something I'm very passionate about. Um,
Mhm.
so hopefully I'll hit all of the points that you had brought up. Uh, I'll start off with validation. Uh,
Mhm.
any third party debt collection agency, in order for them to collect on the debt, they do have to have proper validation. This means the second you get a notice in the mail that they have that debt, you have 30 days to dispute that debt, right? 30 days to dispute and request validation. Do not ignore those letters. If you don't get a letter, you see that item on your credit report, you can still request validation. Now, validation does need to be requested in writing for you to have all of the protections under the Fair Credit Reporting Act and Fair Debt Collections Practices Act. And they are required to supply you with a full validation. So validation is different than verification. So validation means you need the proof that you owe that debt. And it is a bit more complicated than that, but I'm going to leave it a little bit higher surface level for now. Now, when it comes to debt collections practices, they are able to call you 5 times per day per number, unless they get a hold of you. If they do get a hold of you or they leave you a voicemail, they can no longer continue to call that day. Uh,
Mm.
there are set hours to which they can call you between, so they can't be calling you late at night. They have to respect the time zone that you live in.
Mhm.
In addition to that, they cannot harass you. Harassment is typically pretty difficult to prove. And then, depending on the state you live in, there are certain disclosures that they are required to read to you if they do get a hold of you by phone. Now, I know you had mentioned you can get them to stop calling you. You certainly can. You can send a cease and desist. Now, a cease and desist can void them from communicating to you with respect to your request for validation. So if you are trying to get a hold of them and acquire documentation, don't send a cease and desist because you're telling them they cannot contact you. And then if
Mm.
they cannot contact you, they cannot provide you with the validation. So
Oh, excellent. Excellent
yeah, so if
point.
you are
Yeah.
trying to get proof,
Mhm.
don't do the cease and desist.
Oh, okay.
um,
Thank you.
so
Yeah, thank you. No, thank you. That's That's a real eye
Absolutely.
opener. Thank you. Yeah, I'm awake
Yeah.
now. Wow, I never thought of that, but that makes absolute sense. Absolutely. Wow.
Yeah. No.
Powerful.
Now the other thing that is important is with a cease and desist is there are what's known as zombie debts. Um,
Hmm.
so with a zombie debt, that is going to be any debt that's past that statute of limitations of either of reporting on credit, so it can be over 7 years old, and then also past the statute of limitations for legal action. So with any sort of a zombie debt, with any sort of a zombie debt, it may be a good idea to send a cease and desist. That way, you're not being bothered by that collection agency, because it's not illegal for them to continue to try to collect on a debt that's, 15, 20 years old. They're just probably not going to get paid on it. Or they want to bug you until you pay them, and that's why a cease and desist may be important in those cases, just so you can get them off your back. But you certainly don't have to pay anything that's that old.
Hmm.
So
Okay. Yeah. Thank you so much. Wow. That's just a gold mine of information right there. I mean, thank you so much, Ivory. You've been just giving us all these gold nuggets all throughout the past 30 minutes here that we've been on this webinar. So thank you so much. Really, really
and
good stuff. Yeah.
there is,
Thank
just
you.
to be very transparent, there is so much more to know about collections.
Sure.
There's a lot of myths out there about collections, so if you're not sure or if you're confused about collections, just make
Mhm.
sure you are seeking a professional before taking any action, because
Yes.
doing things like just paying a collection won't help your score. It does
Mhm.
not remove it from the report unless they're agreeing to delete it in exchange for payment, with the exception of medical collections, which are legally required to be removed if paid. So we are just scratching the surface, just hoping to impart some good knowledge on you. But I just thought I'd step in with that one last comment.
Right. No, thank you so much. Yeah, because that just reminds me of that gentleman up in Alaska that I had brought to Ivory. I was working with him, and I guess he had some collections that were under 2 years old, and I thought it would clear the statute of limitations on the time, but I guess it didn't. So he asked the bank to dismiss or write it off, and they in turn went back after him and started collecting money on him. So he had to go to an attorney, I think, and ask them to stop garnishing his wages, and he settled with them somehow. But yeah, it's really important. So be sure to watch this video again and listen to what Ivory just said to us. I'm going to do the same thing. So you want to be very, very careful when you're dealing with debt collectors, as Ivory had just pointed out. And I'm going to reiterate that as well. Just being, just having that experience from what I just heard. So, okay, so yeah, I mean, yeah, I know debt collections and all this stuff is probably another webinar, Ivory. We're going to probably have to do this again. This is a
Yeah,
lot of
definitely.
fun. I'm learning so much. I mean, it's just, this is phenomenal. Yeah, we're definitely going to have to do another webinar for sure. Um, Okay, I want to just go ahead and move on. I know we're kind of a little running. Let's see here. We're a little over 30 minutes now, going 36 minutes now. But I just want to quickly talk about one other thing here before we close out. And that is, I just recently signed up with a company in Florida that's helping business owners get a tax credit, and it's called the Employee Retention Credit, ERC. It's a government sponsored stimulus program designed to help businesses that were able to retain their employees during the COVID-19 pandemic. Okay. So it's the only drawback is it's W-2 only, no 1099s. You have to have at least 5 to 500 employees, nothing less than five. They just won't do it. They don't really like family members, like a family-owned business, because I don't know, for some odd reason for the IRS, it sounds a little too cheesy for them. So they don't really they discourage that. It just makes it really difficult. This is a refundable tax credit. It is not a loan. You can get anywhere from $5,000 up to $26,000 per employee. So imagine if you had 5 employees, and let's say that you could recover or get a tax credit for 20,000 per employee, you get back 100,000. This company that I'm with, they have professional CPAs and attorneys. They will basically contact the IRS and redo your tax returns for you, and then work with the IRS in getting that tax credit to you. And the way it works is we don't have any upfront fees. There's no cost associated with this program and getting involved. So if you submit your documents or go through this program, and let's say, for example, that we don't get you any money, well, then you don't owe us anything. It's just basically pay for performance and for the amount we get. Okay. Yeah. So once again, yeah, no upfront fees. There's no cost associated with this. And what I was told is that when the money will go directly to your bank account, and then we'll send you an invoice for the company's fees, which is, I don't know. I'm not the expert. I'm only an affiliate partner with this company. So I'm going to defer that to the professional. But this is something that really, really excites me, because I know there's a lot of businesses that could use this money. And so if you're an employer and you've got between 500 employees, W-2 only, please, please contact me. Please contact me. Take advantage of this. And Ivory, if you have any clients too that are business owners, this is something we can work together on. Okay. So basically and if you're interested in doing this too, I am also looking for referral partners, because the company is paying me 10% of what they collect. And then anybody that I sign up underneath me, I get 5% of what you make, but you also get your 10%. So if you're looking for a side hustle, and a lot of business owners, and all business owners want and need money. So here's your golden ticket. So please contact me on that. Yeah, so if you want to get started, I've left my URL here on the my link up here for this program for the ERC, is that tinyurl.com/anchor ERC. And my business capital company, if you want to get a loan for a business, be it startup financing, or if you need some money to pay off taxes, working capital, buying out a partner, merger acquisition, what else can I think of? Merchant cash advance or accounts receivable financing. I've got all that stuff lined up for you. I work with a lot of different lenders. I just signed on yesterday with a lender out of Chicago area. They are providing a 5 or 7 year fixed rate business loan. To qualify for that, you have to have your personal income has to be 50,000 a year or more, and your credit score has to be 680 or better. That's basically it. You don't have to submit any of your business documents or nothing. This is not a business loan. This is kind of more like a working capital loan, but they just base it on the borrower, not on the business and what you're doing. So they're not going to ask for financial statements. So that's awesome. That's an awesome program. So please contact me if you have any questions about it. Again, my information's on the screen, and I am a very humble, nice guy, and I want to make sure that my good dear friend Ivory gets her share of time to promote her business. So Ivory, I'll let you take over. Do you have any closing comments? Here's her contact information up here on the screen. So Ivory, I'll let you take it.
Sure. So we offer free reviews of the credit report. Essentially, if you are unsure if there's the potential for credit improvement, or you have credit damage and you're looking for some help, you can schedule a free consultation at incitestrategies.credit. Phone numbers there on the screen as well, so feel free to call as well. The only state that we cannot do business in is Georgia, simply due to the laws. Credit repair is not legal in Georgia. Any for-profit is not legal.
Oh, wow.
Yeah, so that's the only state we do
Wow.
not practice in. So feel free to call or sign up for a free consultation if you are in the lending space and you are looking for assistance with your clients. We do partner as well. When it comes to just learning more about credit, we do offer a course called Credit Worthy. You can find it at trycreditworthy.com for a free preview of the course. This will allow you to learn pretty much everything there is to know about credit, what options you have available to rebuild credit. Really, the only thing it does not cover is the actual credit repair process. So feel free to check that out at trycreditworthy.com. Otherwise, we are on all social media. So we've got TikTok, Instagram, YouTube. So there's a lot of free content out there. If you're not somebody who necessarily is wanting to hire a credit repair company, but wants to learn more, there's a lot of free content that you can utilize that we offer. So
Okay, and
thank
I'm
you for
sorry,
having me
Ivory.
today, Andrew.
Oh, you're absolutely welcome. Thank you for blessing me, and it's been my honor. One more time, can I get that URL, the link there? It was
Yeah,
try.
trycreditworthy.com. So trycreditworthy.com. And that is for the credit education course that we offer. Yep, trycreditworthy.com.
Okay,
And then our
okay,
website is incitestrategies.credit. There is a link on there for the course. There's a lot on the site. We offer a credit rebuilding plan out there as well. So if you need a resource, we probably have it. So
okay. Great, awesome. That's fantastic. Yeah, okay. Well, thank you, everyone. Once again, this recording will be posted on the YouTube channel, which is, the URL link is right up there. I will also, of course, make sure Ivory gets a copy of this recording. But thank you so much for your time and for your attention. I hope this has been very beneficial for you. I know it has been for me. Um, but yeah, we look forward to hearing from you. Please, if you have any questions or comments, contact myself or Ivory. We'd be more than happy to help you. In the meantime, I just wish you all the best and hope to hear from you and your success stories, or if you need some help. Again, we invite you to just reach out and contact us. Ivory and I are both very nice people. We would be happy to help you out, and um, we're not pushy salespeople or anything like that. So you don't have to worry about getting bamboozled or anything like that. So okay, well, I'm going to shut up and stop this here and get this going. But anyway, again, thank you, and God bless, and have a great day. Okay, let's see here.